Philippe Cloutier, head treasure hunter for Cartier Resources, call sign ECR, and I feel good to see you. I know we've talked about hunting hidden treasure for some time here, so yeah, let's get a little update here. You've been working at the Chimo Mine, and I know you just were talking to me about this fact sheet you put out. So yeah, run through this. Looks like it explains everything in a nutshell.
Well, absolutely. I mean, this is meant to be a one-pager that summarizes all the highlights of the project. And it was crafted, right after we published our PEA. So it is the Chimo Mine Project. Well, we've got a PEA that's completed. It's a gold project in the Abitibi. We don't need to sell that jurisdiction because it's like, it's a very friendly, steep in mining tradition. And the project's located right out of the Val d'Or mining camp with, proximal to infrastructure and workforce. So listen, we have a project that's worth net present value of $388 million. We have an internal rate of return of 20%. It's pegged to be producing 116,000 or 117,000 ounces per year over a mine life of just under 10 years. The gold grade, well, once it's ore sorted, the mill feed is going to be 4.6 grams per ton. It's got some very, very interesting metrics. But what I want to show here is every time we've thrown a drill program at it, the program or the asset has grown. All right. So that's what you have to understand. It's a project that combined inferred indicated, we have over 2.4 million ounces. We have interesting grades, although it's an underground mine. The mineralization there is amenable to ore sorting. So every time we announce drill results on the project, I want people to understand that what happens is the grade in the headline of the release, you can multiply that by 170%. And that's the gold grade that will be at the mill. The impact of that is you're mining 4,500 tons per day, but you're only milling 2,400 because the sorting is effective. And so it's cost savings of 46% on the waste that you're going to process. Another thing is we've got two major shareholders, Agnico Eagle Mines and O3 Mining. And here are the metrics. Okay, the metrics and the decision-making criteria for investors is, well, look, we have a net present value per share that indicate that we should be trading above $1. We've got enterprise value per ounces of gold that indicates that these things have each ounce has cost us $9 to find. And the S&P Global Market Intelligence Report has demonstrated that the M&A price paid for gold ounces across the board over a compiled 10-year process, well, these M&As take gold out at $98 an ounce. So I think people should pay attention. They should go to our website. They should do their due diligence. But the investment proposition is that, we're trading at 7 cents, where we should be trading on an ounce basis and a net present value basis well above 50 cents, and the comfortable price would be $1 a share.
Yeah, you certainly make a good case for being undervalued. So yeah, but walk us through here short term here, Phil. Investors looking for catalysts right now. It seems like there's no one even around. No. Probably wouldn't take a whole lot, I would imagine, to change your life. You've got a lot of momentum for gold. Gold's already moving. Obviously you're undervalued. Take us through the catalysts here. What can an investor expect right away to
all right.
As their stock?
Listen, we've got cash in the bank so we could weather the storm. You touched on the market being depressed, and the markets are sideways. Like, this is a bear market for minerals resource. So we have got cash in the bank to weather the storm. We have a story. We have an asset that naturally everybody expects to go back into production one of these days. And we have a very small team. A few months ago, we had a burn rate of about $750,000 per month. There were intense forest fires in Quebec that basically banned us from continuing the drilling. But it so happened that we had completed the drill program. Our burn rate now is in the vicinity of $50,000 per month. So we've got cash to weather the storm. We have a tremendous asset, a tremendous story, and we're essentially conducting a lot of paper engineering to make sure that we understand all the alternatives moving forward: sale of the asset, development partnership, joint ventures, royalties on the project, etc. I mean, what we're doing is we're actually brainstorming ourselves through this storm. And, the consolation is that compared to other juniors, well, we have the treasury to weather that storm. So that's those in the near-term catalysts are additional drill results, because we have about 2,000 assays stuck in the lab. So we'll keep feeding the market with drill results. We will keep feeding the market with, the additional targets that we've identified on the project. And I mean, but Rob, waiting around for the markets to rectify and turn, that's not a winning strategy. Waiting around or sitting around for somebody to take us out, that's not a winning strategy. So very fortunately for us, we're taking this opportunity to slingshot the project to another level.
Yeah, and again, building off the treasure hunting, that's what they're here for, Phil. They're here for the big one here. So I think you've given them a tremendous opportunity by the weakness in the market. So any serious treasure hunters just might get a few extra zeros on their investment by getting involved here early. So I guess you got to trust the treasure hunter, Phil. So we'll wish you luck here moving forward, and we'll certainly look forward to checking back in when you have some more news and kick the can down the road. So it's Phil Cloutier. He's the head treasure hunter there over at Cartier, call signs ECR on the venture there. Phil, appreciate the update.
I thank you very much.